The artificial intelligence boom is pushing high-tech stocks up. Nvidia stock looked the strongest growth on a Monday, and today Tesla shares are taking the lead after the chipmaker. The economic calendar is empty today, but Treasury yields are retreating, thus easing pressure on the stocks. Despite a low trading volume yesterday, the stock market closed with long-awaited gains. After a massive sell-off last week, the benchmark stock indexes recouped some losses. The Dow Jones failed to close with gains yesterday. The blue chip index slipped by 0.11%. The Nasdaq closed with the biggest growth of 1.56%. The S&P500 climbed by 0.69% to close at 4,399 points. The major stock indexes traded higher in the New York pre-market. Futures on the stock indexes added 0.1 and 0.6%. The S&P 500 is expected to trade in the intraday corridor between 4,370 and 4,440 points. The US stock market expressed optimism about artificial intelligence. Nvidia shares leapt as investors anticipated the company's corporate report later this week. Other high-tech stocks also went up on the back of expectations. Nvidia shares surged by 8.5% to lead their gains as HSBC raised its share price target to $780, the second highest on Wall Street. Nvidia is expected to forecast quarterly earnings above analyst estimates when it reports late Wednesday night. Nvidia shares are up more than 220% for the year, while Nasdaq is up 29%. As a result, the technology sector enabled the rally in the S&P 500 and Nasdaq, while the semiconductor index rose by 2.8%. Among those stocks, Johnson & Johnson fell by 3% after the healthcare sector said it expected to maintain a stake of about 9.5% in its newly spun-off consumer health division. Shares of the Goldman Sachs Group dropped by 0.9% after the bank said it was considering selling part of its business. In addition, 10-year Treasury yields perked to the highest last seen during the financial crisis in 2007. Investors are looking forward to Powell's speech at the Jackson Hole. Fears that the Fed will keep interest rates higher pushed US Treasury yields up and increased concerns about the impact of higher rates on the businesses and consumers. On Tuesday, futures for the US stock indexes retained Monday's mood and continued to grow. The optimism around Nvidia's earnings report strengthened the position of large-cap stocks as well. Nvidia shares rose by 1.7% in a pre-market, trading on a Tuesday after gaining almost 9% in the previous session. Other big tech and growth stocks also increased, with Tesla up 3.7% after posting its biggest one-day percentage gain since March in the previous session. Meanwhile, easing the pressure on stocks, the 10-year Treasury yield fell from a 15-year high of 4.35% to 4.31%. Traders are betting on a pause in the rate hikes next month at 84.5%, while the odds of a 25 basis point rate hike in November are up to nearly 40% from about 35.8% a week ago, according to a FedWatch tool. In addition to the tech sector, in the corporate sector, Zoom Video shares jumped by 4.2% in a pre-market trading after the video conferencing platform forecast the third-quarter earnings above Wall Street's estimates. Macy's also climbed by 4% after the department store chain beat sales estimates in the second quarter. Apart from the recovery of the technology sector and faith in artificial intelligence, Today, the market may pay attention to a number of speeches by the Fed speakers. All of them precede the more important speech by Jerome Powell, so investors may ignore the remarks of the policymakers. The currency market traded mostly flat in the New York pre-market. The US dollar reversed upward before the opening bell, having grown by 0.17%. The US dollar index approached 103.5. The intraday CAD for the index is seen between 103.10 and 103.70. Amid the lack of macroeconomic data, popular currency pairs are trading sideways. The instrument will hardly leave the trading ranges today, and the US dollar index is again trying to recover to 103.68, the 10-week high notched on Friday. The index has grown by nearly 1.4%. The greenback is expected to make muted moves ahead of the speech by Jerome Powell at the symposium in Jackson Hole. Remarks by Fed's policymakers will hardly influence market sentiment on forex today. In the light of previous comments by Fed officials, they may maintain hawkish rhetoric and encourage the US dollar's advance. The Canadian dollar is technically gaining ground today, hovering at around 1.3520 in the intraday CAD between 1.3490 and 1.3550. Low volatility in the currency market is accompanied today by sluggish trading in the commodity market. Oil prices are trading flat as investors are still discouraged by China's economic crisis, which reduces demand in the top world's oil importer. Brent crude fell by 0.2% to trade at $84.27 a barrel, WTI 8.2%. Meanwhile, U.S. inventories are expected to continue their decline. A preliminary survey showed that crude oil and gasoline inventories shrank last week. The data from the American Petroleum Institute will be released later on Tuesday, and the crypto market is licking its wounds after a painful slump last week. The market is anticipating fundamentals for a further trajectory. Bitcoin settled at around 26,000, 0.4% lower from yesterday. Popular altcoins are trading in sync with the number one crypto. Ethereum, Solana, Ripple, Cardano, and Binance shot from 0.6% to 2.4%. The crypto market is in a limbo. The standoff with the U.S. Securities and Exchange Commission, the U.S. dollar's advance, and the risk of mood dampen optimism. Bitcoin is also wound down by the federal judge's verdict in favor of U.S. sanctions against the Tornado Cash, a decentralized crypto platform. The sanctions were imposed by the U.S. Treasury Department last year in connection to alleged money laundering and aiding malicious cyber activity, and this increased concerns about regulatory pressure on the crypto industry. As for Bitcoin's intraday outlook, the token's prospects look shaky. The asset may continue trading in a sideways channel between $25,900 and $26,100. If the price goes beyond the borders, it could either fall to $25,400 or rise to $26,700. Our team is monitoring developments in the global financial markets. Check our videos for ongoing trends and risks, share your viewpoints and ask any questions. Subscribe to our channel and see you online tomorrow.